So I like to share a tip of just something that is related to the mortgage that could result in you selling a listing or picking up a buyer that you didn't know you could use to your advantage. And so what I want to talk about today is assumability. The vast majority of mortgages have an assumable clause in the mortgage. So what that means is that the mortgage that I have on my house, if I sell my house, a buyer can come in and assume the mortgage. So it means that if I have a 2% interest rate, they can come in as part of the deal, they can just take over the 3 or 4 years left in the term. And so when we think about interest rates being double that today, and over the past 2 years, people having lower interest rates, irregardless of which lender they use, an assumable mortgage can make a pretty big difference. So if you have a client that you're selling the home, simply ask them, hey, can you give me the mortgage details? Because if you have an assumable mortgage, we can present it. Even if your advertising on the listing comes with an assumable mortgage of 1.89, they may not qualify for that, and that may not be something that they take advantage of, but it's definitely going to make that listing pop, and that'd be a feature that I think is going to be really great. A few things to be aware of. A is that you do have to qualify for that person's mortgage. You can't just take it over without any, if you have like bad credit or anything like that. But I would argue that most clients are going to take out a mortgage anyway, so that's not a big deal. There is some different ways you run the options, like maybe the client only owned 100 grand, and now that new client's to take over $500,000. That's called a assumable, a blend and extend, or assume and extend. These are all options that exist, but they can save your clients, buyers, bundles of money. And taking advantage of this could make a pretty big difference. And when you're looking to stick out as we get more inventory in the market, assumable mortgage is a great situation to look at. So if you want help going through clients' mortgages, seeing what could exist on there, we are available to you. So if you have, so anytime you take a listing, ask the client for the mortgage statement, find out if it's assumable, because we are talking about something that could really mean about $20,000 or $30,000 extra on the price over a client just taking and getting their new mortgage. If that's helpful to you, we love to have a chat. We love to help any of your clients and see if we can make some deals happen at a better price to your seller, a happier buyer, and things to help you out as well.